we are now streaming on Facebook Live. Hello, everybody. Welcome to Desert Capital Management Group. We are super excited to talk to you today about a lot of really great things, but we're really excited to tell you a little bit more about private equity. So first of all, hi, my name is Stephanie Mears, and you have with you here Mark Fierro. And
hi guys, welcome.
And Austin Collins.
Hello, thanks for joining us.
Awesome. So just so you guys know, Desert Capital Management Group is a registered investment advisory firm. We work in all of California. We're in Northern and Southern California. And we work with stocks, bonds, mutual funds, and private equity. We also have other things as well that we work with, but those seem to be primarily what we work with. So we're excited to have you here today. We're going to go ahead and talk a little bit about what an accredited investor is. So Austin, you want to tell us?
Yeah, so there's a couple of criteria. According to the SEC, under Regulation D, an accredited investor refers to an investor who meets criteria, which is a person who has annual income of $200,000 for the last 2 years, with the exception of earning the same or higher income in the current year. It is also an individual who must have earned income above the threshold either alone or with a spouse over the last 2 years. A person who is considered an accredited investor if they have net worth exceeding $1 million, either individually or jointly with their spouse. If you have a business, it could be considered an accredited investor as well, if you have assets exceeding $5 million.
And just to clarify kind of what Austin said, which is obviously extremely accurate, the reason that these sort of qualifications are in place is to sit there and make sure if you are an investor, that you're just fully aware of kind of what's going on type of thing. This is just basically putting the responsibility on us, but as you, an individual investor type of thing. This is about just making sure that this is something that you might be interested in, but you're also qualified for. This is not, we want to sort of eliminate opportunistic things and all the rest of the stuff. So again, that's why we qualify people as, accredited investors and things like that. So any more questions, I'd be happy to sit there and answer.
Yeah, and just to add on to that, actually, if you're wondering if you are an accredited investor, or if you meet these certain criteria, please feel free to reach out and we could go over them and see if you qualify.
Yeah, absolutely. And again, this is so everybody understands the reason we sit there and qualify these things is for the protection of the investor. Like it's basically we want everything that's in the best interest of the individuals we sit there and speak to. So it's in your best interest to sort of figure this stuff out. But yeah, it's in your best interest. We're here to protect you.
Absolutely. So one of the other things that we also take into consideration when we are looking at the investor and what their needs and goals are is the rule of 25. Who would like to talk about that today?
No, I'd be happy to sit there and step up. And again, this will be a relatively brief type of thing. But this is just another way of sort of protecting the people that are interested in investing type of thing. And the rule of 25 basically is, and this applies across all asset classes, right? Like our job is to sit there, we want to sit there and invest for you, help you to sit there and obviously increase your, income or, your savings or anything like that. The rule of 25s is, if you have a career, depending on where you're at in life, you have a career, hopefully you have some sort of ownership of property. Hopefully you're invested in the public markets, but then this is kind of where we're kind of leaning toward on this call is private equity, right? So you want to be diversified. And again, this is true of everything. This is true not just of the things I just sat there and said, but if you are solely involved in just the public markets, we'd want you to be involved in different sectors. We want to sit there and kind of make sure that you're not just, all eggs in one basket type of thing, but on a broader scope, what this comes down to is, either had a career, you have some ownership, whether that's your home or things like that. You're involved in the public markets, but then you're also involved in the private markets as well, which is kind of a unique opportunity because this was, I'd say, and having worked on Wall Street for kind of over 20 years, this was something that was kind of very unique. It was basically always offered to other businesses, like large institutions and things like that. So now we have an opportunity where, and this is a lot of work that, some of the people that we work with has coincided with, the opportunity to get in private equity as an individual is now a realization where you can sit there and take advantage of that. You don't have to sit there and invest 20, 30, 40, $50 million type of thing, which is kind of the standard that it was before. So as an individual, the opportunity to get involved in private equity it's unique. And I think it will continue to sit there and gain sort of mainstream attention. Because if you look at, I have this conversation with friends, family, my parents, for example. If you look at what the banks and all these people are doing with their money, if it's just in a savings account or things like that, they're investing in private equity, they're investing in the public markets type of thing. So you're essentially giving them an interest-free loan. And I have this conversation with my parents probably weekly, trying to explain it to them. So private equity, again, long story short, because I could talk about this for hours, is it allows you diversification, even if you're a little intimidated by the markets. You should be involved in the public markets and you should be involved in the private markets.
Yeah, and just to add on to what you said, Mark, along the lines of private equity, I mean, private equity comes with its fair share of risk, just like any other investment. The best thing you can do is get an idea of what kind of returns to expect when you invest in it and how the underlying company operates to achieve those said returns. I think today we are hoping to shed some light on a new private equity opportunity we have available at Desert Capital Management Group, and give you the information needed just so you can move forward confidently with any decisions you do make. Fortunately for us, though, we work closely with a consulting firm that vets hundreds of companies through a pretty stringent process to produce the best companies and the best opportunities to offer private equity in. So we have had the opportunity actually in the past to offer our clients a couple of these private equity deals just over the years. And I think we could also confidently say that, they've turned out pretty great for our investors.
The track record's been really, really good type of thing. And again, that's past performance is not reflective of future performance type of thing. But I do have to sit there and say the people I work with, and this is Steph, and this is Austin, this is myself. Again, we do have the best interest of everyone that we work with. Going forward, again, we would, we're not sit there and going to sort of pitch something that doesn't necessarily work out. And again, I think another important point is if you get involved in private equity, which again, we think you should, as long as it's the right deal, it complements your portfolio. If we go back to Staff's rule of 25s, the market's having fluctuations and extremely volatile right now. It's at highs. There's some fears the market's going to sit there and sell off. There's a disconnect between the market and, still people on unemployment and things like that. And obviously the reopening trade is a conversation as well. But there are some concerns. The nice thing about sort of private equity and vice versa, the public markets, is they're not necessarily correlated, right? So if the market goes down, for example, which is a concern for a lot of people right now, your investment in private equity, it doesn't necessarily correlate to that. Like there's not a loss of value there. It kind of depends on the deal you're going through, what industry it's in and all the rest of the stuff, which is why it becomes a really nice, I don't want to sit there and say a hedge, just again, reiterating the importance of diversification. Like it doesn't correlate to the market. So you could have some money in the markets and go through the ups and downs of the daily thing, but the private equity won't necessarily go through those things, which is, again, it's another added bonus.
Absolutely. And the other thing that, one of the things that we really want to make sure that we mention here is that there is what private equity kind of, let's go over a little bit more about what the actual private equity is, right? So private equity is money invested in firms which have not made their initial public offering or an IPO. Private equity consists of investors and funds that make investments directly into private companies or conduct buyouts of public companies. So if you want to, just to give you an idea of what some of the private equity companies that are out there right now that are pretty well known, in my opinion, is, for example, the Blackstone Group Incorporation is a really huge private equity firm. They've bought out a ton of homes in Sacramento about 8 years ago. They bought out, millions and millions of dollars worth. Also, Carlyle Group, KKR, TPG Capital, Newtonberg Berman Group, LLC, CVC Capital Partners, and so on and so forth. So they're not just small companies. There's also some really huge companies that are considered private equity deals. So I just wanted to kind of get that out there so everyone kind of understood that there are some good sized companies out there, but then there's a lot of smaller ones that allow smaller investments like 50,000 or 100,000 or 500,000 instead of it being, like Mark said earlier, $50 million or something like that. So let's go ahead and talk a little bit about the private equity that's an opportunity for us right now. And it's called
Steph, can I add real quick to what you just said? I mean, a common question I get a lot for people that do understand private equity is they always ask, like, what are the returns like? Like, what can I expect? And often I tell them it just really depends on the private equity deal you're involved in. And that kind of ties back to what I said about the vetting process, is if you have a good process for vetting companies and you come out with the best deals for these companies that are definitely viable and definitely have long-term prospects, you're going to see pretty good returns. Just a stat real quick in general, between 2000 and 2020, private equity outperformed the Russell 2000, the S&P 500, and venture capital. The deal we're talking about, or we're going to be talking about soon, Atticus Financial Corp. I know they've said they projected their returns to be about 40% a year. Of course, that does fluctuate, but that's the numbers as of right now.
Absolutely. And something that you mentioned in there was venture capitalist, right? So venture capitalists versus private equity, there is a little bit of a difference between the two. So venture capital is actually, it's technically a form of private equity. The main difference is that private equity investors prefer stable companies, where venture capital is usually like smaller company with incredible growth potential. So just so you guys have a better idea of what that is. So let's talk a little bit about the Atticus Group. Okay, so Atticus Financial, I'm going to go ahead and bring that up on the screen here so you guys can see the website. And basically, Atticus Financial is a litigation company, a litigation financial company. So this just became a possibility a couple years ago. For a really long time, it was against, there was a lot of laws against doing litigation financing, primarily due to the fact that it could have been very potentially harmful toward the investor. However, since there's a lot of really great litigation financing out there now that actually is more secure for the client, they're now allowing it and have put new laws in place for it. The litigation finance company that we're working with primarily right now is called Atticus Financial Corporation. Some of the top leaders in the law world are running this fund, and one of them is Ed Lear. He has amazing track record with his cases. He's been a lawyer for a very long time, and he also is up there on the bar with the Bar Association as well.
Yeah, Ed Lear's a great guy. If you don't mind, I mean, a couple things I know about him is he's tried over 300 cases. Actually, this is probably already on there. He's a recognized legal he's a speaker at legal seminars. He's written numerous articles. He's been qualified as an expert witness in state and federal courts. He also served as an arbitrator for Los Angeles County Bar Association since 2017. I believe he was voted super lawyer, which apparently is an accolade for 4 years in a row from 2017 to 2020. He has a pretty extensive background in law, and he's quite the guy when it comes to being a lawyer.
And I think, just to reiterate what Steph and Austin are saying, there's certain deals where it's like you have to be very aware of kind of what's the most important thing. And obviously the people are always the number one thing. But when you have someone like Edward or Lear, I mean, the asset is the people involved. There's other things where there might be a sort of a more tangible asset and stuff like that. When it comes to the legal world, it's the people that you sit there and have on board that are trying these cases, that have the reputation. I mean, the pedigree of someone like Edward and the rest of his team. I mean, this is the asset here, and it's tried and true. I mean, for everything that Austin just sat there and said, we're investing in just one of the smartest minds in a legal world, and proven by Edward type of thing. So, I think that's important. We sit there and make sure that the focus is, because some people want to invest in, it's a tangible asset, right? You're investing in oil, you're investing in this, or you're investing in that type of thing. And here you're investing in the people, more so than on a regular investment type of thing. And again, the track record and the pedigree of the individuals involved is, it's pristine. This is a really unique opportunity.
Yeah, no, I completely agree with you, Mark. The management team is huge when looking at these opportunities because they're essentially at the helm of the business, right? They're pretty much dictate where it goes from there. So that is a big thing that we look at in the vetting process, or the consultant group looks at in the vetting process as well. And I think this is definitely a home run for the management team.
You get
very qualified people.
Yeah, you get Edward's resume on your desk type of thing, and I would struggle to sit there and find. And obviously, we want to look at everybody else, and this is Murray and everyone else. But if Ed's resume ends on your desk, I would struggle to sit there, and it wouldn't even matter what business you're in. You'd sit there and be like, I want to work with this person. And that's kind of like, that's the feeling I get from us personally, or for me personally. So yeah, the pedigree it's just, again, this is, I think, a really unique opportunity. And as Steph said, this is something that's sort of, it's going through an evolution. A few years ago, where there might have been sort of more rules and laws and sort of against this type of thing. This is something that's evolving. This is an opportunity for us to get in kind of, I don't want to say the infancy, but like in a business that will continue to sit there and grow and pay revenues, and having some of the brightest and sharpest minds on board at the beginning. Just to reiterate, it's just an amazing opportunity.
Yeah, and Murray Greenberg, Mr. Greenberg, the chief compliance officer, him as well. He's he's even an instructor for the California State Bar Ethics School. Not to he served as the president of the National Organization Bar Council and on several American Bar Association committees. So he's got extensive knowledge in the industry as well. It's pretty impressive overall.
It is. And when you sit there and think about it, you get all these people together, which is fantastic. But like you said, to have like serving on ethics boards and things like that. Again, this is why it's so special. You have people where their reputation is absolutely pristine. They represent the best of the business. And that's not always the case, type of thing. So again, that just to reiterate, that's what makes this really, really special. I think the people on board it's just an incredible thing.
Absolutely. And so let's talk a little bit about the fund. So what is it really actually, right? So you may be asking yourself, what is in a litigation financing, right? Because not everybody understands what that is. So let's talk about what is litigation financing. So literally what it is you as an investor would hand your money over to Atticus Financial. They then find the best cases that have a higher potential of winning, and they are not in trial cases. They're actually more back office cases. So there's two different kinds of lawyers. And so this is going to be they try a lot of like lemon law cases and those type of things that have a higher percentage of wins, with also a 10% or more gain for each case. So after giving the money to Atticus Financial, they then find these cases to try. Once they gain the funds, that's when after the 2 to 4 years of the hold for the investor, you may be seeing dividends, or you may just get cashed out early if they go to an IPO faster than expected, or after the 4 years, you could just be cashed out, or even go to a higher level. The PPM can go to another price per share above where it's at currently. So there's a lot of options. I know this company's primarily looking to go to more of an IPO status. Does anybody want to add anything about litigation financing?
Yeah. I'll just, I'll add my piece on it, just see if we could flesh it out a little bit. Atticus Financial Corp, It's a finance litigation company. So pretty much what they do is they fund lawsuits and take a piece of the winnings, which right now in this point in time is, in my opinion, a fantastic idea, because with an increase in litigations and litigation costs, especially in California, one of the most litigious states in the country, and the uncorrelated nature of litigation finance with the stock market and macroeconomic factors, this pretty much sets up the investment to be ideal for those looking for alternative investments out of the market. As Steph mentioned earlier, there was two main deterrents from preventing litigation financing here in the States to take off. It's been around for quite a while in Australia and the UK. Those, I mean, not to delve too far into it, but those two deterrents were pretty much, they're called champerty and maintenance. And essentially what it is maintenance says you, as an outside party, you cannot fund a lawsuit. And then champerty is pretty much funding a lawsuit for profit. A lot of states have pretty much moved away from those old antiquated doctrines. And so now a lot of them are allowing it to happen, and they're just providing ethical frameworks for them to operate in. So this is exciting because it's still fairly new. And it's intriguing for us. I mean, it's definitely set up to take off, at least here in the States. Is there anything you want to add to that, Mark?
I was just going to sit there and say, I mean, everything you sat there and said is, again, it's awesome. And if we break this down in a very simple fashion, again, if you have lawyers and they're good at what they do, like, they have success. So it's us kind of trying to participate in that, if you have the right people on your side. And I've seen plenty of things, and this is with friends, and logically it kind of makes sense, right? Like there's certain cases that, you do have a winning argument, but they're not able to be funded. It's going to take a little bit longer term, or they're against someone that sort of has deeper pockets, and kind of just wear you out over time type of thing. So, I mean, I'm actually really fascinated by this, and for all the things you said, Austin, as well, especially being in California, which is extremely litigious state. But having the people, and again, this is going back to the people that are on the board, and these people have been doing this for a while, right? This is, the concept isn't like it just popped up yesterday. They've kind of been sort of, I don't want to sit there and say capitalizing, but they've realized kind of the value in this and helping other people do this. And I think that's also an important issue as well. It's like, we're helping, people that maybe can't get their case to the forefront. We're also helping sort of fund things that might take a little bit longer. And just going back to the resumes that people we sit there and have, I mean, this ticks so many boxes on why this is a good idea. And it will continue to sit there and this will continue to grow. Like Austin said, this is just something that's going to, it's getting kind of ironed out, but it's, we're going to move forward with that. There's going to be more and more people doing this. So getting on the ground floor with the right people and for the right reasons is why this is exciting to me.
Yeah. In more or less words, I would say it's a lucrative industry and it's a lucrative opportunity. I mean, there was even a recent study that identified more than 40 funders in the US market already. And that's growing every day, right? As more people enter that field. Yeah. I mean, even as a business, Atticus could diversify, just because they have so many options for funding in that field. All right. They could diversify by the industry, by the type of dispute, by the jurisdiction, by claim size. And I mean, there's plenty of other factors that they could consider when looking at a lawsuit.
I mean, if you, just to reiterate kind of what you're saying, you have the people that are like putting this together, right? Like, would this be something that these really intelligent minds that have a track record of 40 years have acquired the highest accolades in their industry? Is this something they would pursue if they didn't think there was a possibility of success? Right? Like, again, we're dealing with some really intelligent minds type of thing. Like, they wouldn't waste their time if this wasn't worthwhile to them as an individual, us as investors and things like that. Right?
Yeah. Yeah. And I mean, even in the last decade alone, I mean, it's come a long way. I think that the fact that we have this opportunity to offer to our clients is fantastic, because like I said, it does seem pretty lucrative, especially in that industry.
And what I like, it's actually lucrative and for the right reasons as well, right?
Yeah.
You know, this isn't opportunistic. This is dealing with people like, and you know, you mentioned like, you know, Murray has, as far as being on the ethics board or having, you know, ethics credentials, this is getting involved in a business that's, you know, in the legal world, there's obviously a lot going on, but having, you know, not only intelligent people, but people are ethical, and there's an opportunity to sit there and make money. Like Harry said before, this, you know, not often do those tick all the boxes type of thing. I think this is a really, really unique opportunity.
Yeah. And I mean, you know what I find interesting is I feel like a lot of people would look at this and be like, okay, it's just the lawyers trying to make more money. But I mean, that's part of the reason. But the other side is this actually levels the playing field for the small guys. I mean, if there was a case that was actually in court with Caterpillar where it was a smaller plaintiff, and they were pretty much just trying to bleed him out. You know, they just keep pushing it off. You know, costs get expensive, and you can't hang in there. So what happened was a fund came in and actually backed him. And then Caterpillar threw a fit and was trying to say that they had violated the maintenance and champerty doctrines, which had already pretty much the courts had already said that we're not going to follow those anyways. So they lost that, and then Caterpillar ended up losing the suit. So it's interesting to hear things like that happen, because in any other circumstance, you know, the small guy, you know, either is settled out of court and gets less than they deserve, or they just bled out over time. So I think it really levels the playing field.
It does. It presents an opportunity again, sort of, you know, obviously on the hope with the right side type of thing. It gives an opportunity for so many things that don't come to light. And like you said, it's just either they weigh on you and they have the financial resources and time on their sides, but it doesn't necessarily make the verdict to be correct. So again, these are all things why this is, I mean, I'm really, really intrigued by this, you know, and simply put, like we all know lawyers do pretty well for themselves, right? So, you know, if we have the right lawyers, then it becomes even more appealing. You know, it's like we have the right lawyers with the right education, the success rate, the, you know, just the background as far as just, you know, being the right people for this job. It's a fascinating opportunity. It really is. And again, the reason we're sitting there and I'm kind of sitting there and juggling with my thoughts and I'm not sure how to sit there and fulfill them completely is because this is a new industry, right? And we've talked about this, and I think these guys have toyed with this before, and there's a reason where it got delayed until now, and that's because now I think people are a little bit more open to what's going on, you know. But the opportunity to sit there and get in on something like this on kind of the ground floor in an industry that I truly believe will continue to sit there and grow and provide opportunities for people. But again, I want it to be for the right reasons, right? I want to have the right lawyers. I want to have the right ethics. You know, I want all those things to sit there and be in place. I think this is one of those opportunities.
Yeah. I mean, just to sum it up real quick, I guess the benefits we're talking about here is the management team, the diversification in income avenues that the business actually has, the diversification it could provide the investor, the private equity investor, just not being correlated with the markets, and the potential high percentage they could get on this investment. I mean, of course there is risk associated, but I mean, with those things being said, I mean, it sounds like a pretty sweet deal. So like, if you think that you qualify, or maybe qualified as an accredited investor, or if you're interested or curious or just want more information, I mean, as always, feel free to reach out to Mark, myself, or Steph, and we'll give you more information and have you come to the right decision or whatever you think is appropriate. So
yeah, absolutely. We'd love to sit there and just kind of help and educate, and we're learning on a daily basis as well, type of thing. You know, we love coming across kind of these opportunities. If you want information, like please sit there and reach out to us, and we can sit there and help you in any way we can.
Yeah, I think we just wanted to get this out to you guys sooner than later. It's an emerging industry, and it's pretty exciting.
Absolutely.
Just feel free to reach out. Is there anything else, Steph, you wanted to add?
Yeah, of course. I always have something to add. So, just kidding. So, I think the biggest thing for me is since I have worked with Desert Capital for such a long time, and we have seen so many amazing opportunities come our directions for private equity. This is very unique, like we've talked about, and so this is a great opportunity for those who are new investors into private equity to get into. If you've never been a part of private equity, this is a great way to start. There's a lot of security within this specific private equity. So I think in that, this is a great way to start if this is something that you're interested in. So if you're interested in contacting us, just so you know, you're welcome to go ahead and get either a free portfolio analysis if you have questions about the private equity we've talked about today, or if you just have questions about your portfolio or money in general, we would love to hear from you. If you text free to 797979, we will go ahead and contact you back right away to find out how we can help you. Or you're welcome to contact us on our phone numbers at 916-966-3100 or 310-640-9100 at our offices. You're also welcome to contact us or see us through our website, which is www.desertcapitalmanagement.com. And then if you would like to, you can take a free Riskalyze to get a better idea of what your risk tolerance level is, which is great to know for if you're interested in private equity, what your risk tolerance level is. Because if your risk tolerance level is a 0, private equity may not be in the right realm for you. So we just need to get, that would be a great thing if you're interested in that as well. So we would love to hear from you. And we definitely look forward to helping anybody who's interested with their portfolios. But more importantly, if anybody has questions about private equity in general, you don't have to buy it right then and there or anything like that. We would love to help you with any questions you may have. We appreciate you. We are so grateful to have you here. Hi, Betty. Thanks so much for being here with us today. I just saw that you were on Facebook Live with us. So thanks so much for that. And we will talk to you very soon. Have a wonderful day. Okay, everybody?
Bye, everyone. Thank you very much for your time.
All right.